Welcome back. We're now hearing that the Federal Reserve is beginning quantitative easing through the repo facilities. Now, we're going to be discussing that along with many other topics, including Elon gives a bearish Dogecoin outlook, giving us some insight into whether Dogecoin is going to be implemented by the government. HEDERA, HBAR, gets Wall Street interest. USDC's bull signal, and Coinbase is trying out ADA. Let's get right into today's topics. Make sure you guys are subscribed to the channel. That way you never miss a new video, and also give the video a free thumbs up because cryptocurrency is not free, but this information right here on YouTube is. And remember, these are just my opinions. Do your own research. We're now hearing that Bitcoin price is gearing up for the next leg of the acceleration phase, according to financial giant Fidelity. Research from Fidelity Digital Assets. And by the way, you can purchase and trade crypto right on Fidelity's website, fidelity.com/crypto. One of the first financial institutions to implement crypto trading. They are now suggesting that the Bitcoin bull market is not done yet, as the acceleration cycle has yet to produce a blow-off top. Now, as we've discussed in this channel in depth, in my view, we have not hit the top of the market. Now, again, I could be wrong on this. We hit a peak. We hit the top of the market in December or November of 2024. But now we're entering that 12 to 18 month time frame, as the Bitcoin halving was about 1 year ago from when I'm recording this video. And the 12 to 18 month time frame is typically, again, based on previous cycles, when we see the largest and most volatile swings in Bitcoin, and hopefully therefore the rest of the market, because we have not really seen too big of an altcoin market just yet. But let's understand what Fidelity is saying here. Fidelity Digital Assets questioned whether Bitcoin's price had already seen its cyclical blow-off top, or if Bitcoin is on the cusp of another acceleration phase. According to Fidelity analysts, Bitcoin's acceleration phase are characterized by high volatility and high profit, similar to the price action we saw when Bitcoin pushed above $20,000 during the previous cycle in December of 2020. While Bitcoin's year-to-date returns reflects basically 11.5% loss, and the asset is down nearly 25% from its all-time high. The analysts over at Fidelity said that the recent post-acceleration phase performance aligns with Bitcoin's average drawdowns compared with previous market cycles. And you can see here in this chart, it shows you drawdowns from November of 2010 all the way through March of 2025. First drawdown, 50%, 40, 35%, 30%, 70%, 60%, 25%, and so on. You can see that many of these drawdowns are kind of in line with historical norms, which is obviously true. And it's not just Bitcoin, it's the altcoin market, it's the Bitcoin proxy stocks. Pretty much everything is down. But we know that the Wall Street is still interested and still involved. And we're going to be talking about that in just a few minutes, because we have other ecosystems like HBAR that is getting actual Wall Street interest, and even Cardano, which we're also going to discuss in today's video. But for this part of the video, it's really about this acceleration phase, because we know Bitcoin maintains and basically dictates what's going to happen in the rest of the market. These analysts over at Fidelity suggest that Bitcoin is still in acceleration phase, but is moving closer to the completion of this cycle, as March 3rd represented day 232 of the period. Previous peaks lasted slightly longer before a corrective period set in. The analyst over at Fidelity said, quote, "The acceleration phase of 2010 to 2011, 2015, and 2017 reached their tops on day 244, 260, and 280 respectively, suggesting a slightly more drawn out phase each cycle." And so right now we're at that 232 day period, right? This is very close to the previous drawdowns, 244, 261, 281, which would put us anywhere from 10 days from when I'm recording this video, or when this article came out, or when the research came out. This is going to put us, well, it shows you March 3rd. So we're already a month after that. So 262 approximately. So we're kind of right in the middle here. And so when is this going to be over? I mean, hopefully we're going to get out of this acceleration phase. It's going to come to a completion, and we're going to see some adjustments in the market, hopefully soon. So yeah, Did they say anything else? Not really. Okay, so the Fidelity analyst said that the metric to watch is the number of days during a rolling 60-day period when the crypto hits a new all-time high. He posted the following chart and said this: Bitcoin has typically experienced two major surges within previous acceleration phases, with the first instance of this cycle's following the election, right, the Trump pump. If a new all-time high is on the horizon, it will have a starting base near $110,000. And again, that's the previous all-time record high that we just reached recently. And we're still basically at all-time record highs. I mean, we're at higher highs or higher lows, I should say, than where we were in the bear market, right? Where we were in the previous bull market. And so we're still much higher. But many of these cryptos and altcoins have not hit their, anticipated highs. But in my view, this next pump, whenever this acceleration phase is complete and we move into volatile upside swings and potential downside swings as well, this is it, guys. I think this next pump is going to be the pump to sell into. In my view, personally, what I believe is going on, obviously, this may change based on the factors at play here. There's a lot of people that are anticipating an extended cycle. We talked the other day in my video about a delayed bull run. Maybe we're a little bit late in the bull run. But I don't know. Historical data shows that within 18 months after the Bitcoin halving, the market enters correction. And aka bear market. Are we there yet? I don't know. I don't think that we are. There's too much good going on in kind of the overall ecosystem, and some of that we're going to be covering in today's video as well. And that brings us to our other topic, that some cryptos may not be getting the positive sentiment or positive light that people expect. Elon Musk now saying the federal government has no plans to use Dogecoin. And again, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video. So effectively, Elon loves Doge. They paywall this article, obviously. But he's saying that the government has no plans to use the dog-themed meme coin. And we've discussed this before. We've kind of discussed whether or not Dogecoin is going to be used within the government, right? Because we know that they want to put some things on chain. They want to put some things on the blockchain. We also know that Elon created Department of Government Efficiency, Doge. And so I was kind of, and he's also a fan of Dogecoin. So I always kind of theorized, especially here on the channel, that maybe we're going to see Dogecoin be used for the government. But now Elon is putting cold water on that, saying it's not going to happen. And I think that this means that the meme coin season is officially over. That's it. That's it. People were holding on. Really, Dogecoin is the ultimate meme coin. It's kind of like the Bitcoin in the crypto space, Dogecoin in the meme space. And so we've seen a lot of these meme coins, Dogecoin, Shiba Inu, Peanut the Squirrel, all of these other kind of meme coins out there kind of really moving higher. We saw the Solana pump in meme coins. And a lot of it wasn't based on fundamentals. And a lot of it was based on value extraction from the crypto ecosystem. We saw that with the Argentine Libra coin that was released, and then the developers withdrew or extracted $100 million with it just in a few days, which is pretty unbelievable. And what we've seen since then is the extraction of value effectively from the Solana ecosystem. Everybody's fleeing the Solana ecosystem, even though the FUD says that they're fleeing Ethereum. Nobody is fleeing Ethereum. That is complete hogwash BS. But in the meme coin space, what we are seeing is a little bit of pressure, a little bit of hope. And really, I think that this is it. I think that this is the hope is gone after this, right? With knowing that Dogecoin is not going to be used for anything. These are just meme coins. There is no value behind them. There is no use cases behind them. Nobody is using them. Nobody is planning on using them. That's just what it is, guys. That doesn't mean that these prices can't go higher. Obviously, the prices can go higher, especially just based on the speculation. But we like to invest based on fundamentals. And remember, this is what I've been saying since basically the middle of February on this channel, is that the markets have to move back to fundamentals. And I think This is where the market is correcting, right? We saw Solana, best performing crypto asset of the cycle, correcting, right? What did Solana produce? What kind of use cases are we seeing? What kind of adoption and integrations are we seeing? Not that much. Not that much. And most of the hype around Solana has been due to the meme coin activity on the chain. But as we've covered extensively on this channel since December, just a few months ago, I mean, revenue is down 90 something percent. Fees are down 90 something percent. Activity on the chain, Solana, is down 90 something percent. And a lot of this is due to the explosion of the meme coin ecosystem, and people are still holding on that meme coins are going to be going up to the moon and Dogecoin's going to hit $1 again. Sorry to tell you guys, I'm getting very 21 vibes. 2021, Elon Musk was going on Saturday Night Live. Everybody thought he was going to pump Doge on the show, going to talk about Doge. Didn't do it. That was the end of the cycle for Dogecoin. This actually may be the end of the cycle, not only for Dogecoin, but for the rest of the meme coin ecosystem, based on this huge news from Elon stating the government is not going to use it. And so what else would drive the price of Dogecoin higher, or even the speculation into any of the meme coins higher? In my view, not much, not much. And so yeah, meme coin season is officially over. Meanwhile, in fundamental crypto news, Circle, the founder and issuer of USDC stablecoin, is hiring banks for their long-awaited IPO stablecoin. They're expected to publicly file their IPO in late April. This is amazing. First of all, this is Jeremy Allaire, if you don't know. He's the founder and CEO of Circle. They're the ones who issue USDC. Well. Yeah, people are now going to be, they're looking to make money in stable coins, believe it or not. Now, again, this article is paywalled also, but the news is basically that they're planning on IPOing. But the more interesting news is the banks that are backing them. Remember Jamie Dimon from JP Morgan Chase just a few years ago said, if anybody is trading crypto, we're going to fire them. The crypto is just fraud, manipulation. It's not real money. It's not real currency. We don't need stable coins. We don't need CBDCs. I mean, he said all of this. And meanwhile, JP Morgan and Citibank are the investment banks working with them to IPO. So you got two of the major mega banks working to help IPO the stable coin, aka the new digital dollar. This is the digital dollar. The government is not going to create their own dollar. They don't have to. We already have a digital dollar. And now it's being highly integrated, and it will be highly integrated into the financial system, and now it's going to be publicly traded. When it's a publicly traded company, what does that mean? They need to make money. And so we're now in this space where everybody's focused on meme coins and Solana and all of this, right? Meanwhile, Wall Street is they're not even paying attention to any of the cryptos. They're like, you guys go play with those cryptos. We're going to play with the stable coins. And this is an indicator, guys. This is the digital dollar. The banks would not be getting involved. The company would not be going public unless they knew that they were going to have the backing of the financial institutions here in the United States. And I don't think that this is just because of the administration, just because of the presidential administration, because this is something that's been planned for years. And if banks are involved in this, the banks are not just flipping because, oh, we have a new president and the administration is different about crypto, right? Jamie Dimon, remember what I told you guys. All of these banks are going to FUD crypto as long as possible, and they have been doing that as long as possible. Now we have a pro-crypto friendly administration, and therefore a pro-crypto friendly country. So it's much harder to fight that. And this is why I think the banks are now involved. I mean, they have been involved. Remember what I've been telling you. The banks are trying to back-end integrate all of this technology and control it before they give it to the masses to use. And that's exactly what they're doing and what they have done. So yeah, this is very interesting. Will I be excited about a Circle IPO? Probably not. Okay, this is a fucking stable coin. Yes, there is money to be made. There is. Circle makes money. Coinbase makes money. And a lot of that money is based off the stable coins. But now Circle is becoming a bank. That's what you guys have to think about. They're becoming a bank. They may not call it that, but that's what it is. And now they're going to be backed by the Federal Reserve, most likely, and this whole banking regime. What this means for the crypto space, I really don't know. I mean, stable coins is kind of like an awkward category because you don't really make that much money on stable coins, and stable coins stay at the dollar. So you can only make money on other products, whether loaning, borrowing, interest, and stuff like that. So it's going to be very interesting to see. And also, it's going to be interesting to see how the banks try to compete with Circle, because now Circle is going public and they're going to be highly integrated into a lot of these different financial and payment systems. One thing you have to remember is people are they going to want to hold the dollars? Or are they going to hold the stable coin dollars? Well, if they're making 0.001% at JP Morgan holding their dollars, and Circle is going to give them 5 to 7% holding USDC dollars, where do you think the money's going? USDC. And this is the conversion. This is the transition period, as they call it. Now, if we go to the Federal Reserve's website, we can now see that the Federal Reserve is planning printing. Now, by the time you're watching this already happened. And I'm going to be doing updates on this probably next week or the week after. But now we're seeing that the Federal Reserve is starting to print money again. And they're starting to print money in these back-end programs like the repo facility. Now, we've covered the repo facility on this channel before. It's basically the Federal Reserve injecting money into overnight lending markets to give the markets the illusion of more volume and the liquidity that they need. During the pandemic, right before the pandemic, there was some movement in the Treasury yields, and the Federal Reserve stepped in with these repo facilities that were supposed to be temporary to kind of ease the yield jumping. Well, it went from $30 billion of injecting money over the course of 3 weeks to $1 trillion a day. And when they're doing $1 trillion a day, this is indicated they're going to print more money. And then they started printing $4 trillion during the pandemic. And then that turned into inflation, but it increased all the asset prices along with it. And so the Federal Reserve basically will conduct additional overnight standing repo facilities every day between March 27th and April 2. What was during that time frame, right? Initiation of the tariffs. Now, what happens with these tariffs, how long they go for, I don't know. But just based on the data, this was 1 week before the tariffs that they started repo facility. The aggregate operation limit of $500 billion per day will apply to the combined daily operations. So they're looking to inject every day, the last week in March, first week in April, $500 billion. Why are they injecting that much money into the overnight repo markets? And why did they do it why did they announce it in advance, right? It wasn't like an emergency injection. Like, this was a planned injection. Right around the time they're planning on implementing these tariffs. Well, I don't know the answer to the question, but when I look at repo operations and reverse repo operations, this is the reverse repo. So they do the opposite. They suck liquidity out of the system. You can see, you can't see it. Let me make this a little smaller so you can't see it. So you can see right here at the end over here, this is where we are today, end of March. And you can see the reverse repos have actually been increasing throughout March. You can see, basically, if we pull this out to the all, you can see during the pandemic, or right after the pandemic, we saw significant reverse repo operations. And when you see the reverse repo operations high, on the other end, you saw the repo operations fairly low, and then a massive drawdown in 2023 into 2024. But if you just look at the last few months, it kind of trending back up or creating a floor, and floors are created to trend back up. Now, in the repo and reverse repo operations, the Federal Reserve does not have to do these. But if they don't do this, they can't stabilize the debt market. And if the debt market is not stabilized, this could crash the stock market, the dollar value, the crypto markets. Because if you really understand how these markets work, this is a whole debt-based ecosystem of the economy. Everything is debt-based. And so if the debt market collapses or has high volatility, it's not good for stability, and it creates concern in the markets. And this is where the Federal Reserve comes in with these repo and reverse repo operations to kind of ease the markets, right? Quantitative easing. So when I saw this, that they were planning on doing 500 billion a day, I'm like, wait a minute. We weren't doing basically any repo operations recently. And now they're doing 500 billion a day for a week. So we have to keep a very close eye on this, because the repo operations from a market perspective is positive. It's not positive because it means that there's instability in the markets, but it's positive in terms of what we've seen previously happen is when repo facility increases and they're injecting all this money in the ecosystem, we're going to get to a point where they have to print. And when they print, that's when the prices go up. That's when the assets go up. That's when all the assets could jump. And this can happen overnight. This could happen over the course of a month, week, year, I don't know. But all of these kind of signals of where we're going, right? Meme coin season is over, back to fundamentals. Stable coins are going to be IPOing, back to fundamentals. Integration into the financial system. Acceleration phase is occurring. We're hitting historical timelines where we typically will see more movement in the markets. Everything is kind of leading to this. And meanwhile, people are still like, Cryptoviser, is this altcoin going to do well? Is this altcoin going to do well? This altcoin has not been doing well. And a lot of this, again, guys, is because of the Solana ecosystem sucking a lot of this valuation out of the rest of crypto, right? We didn't have this in previous cycles. But I think that everything is going to go back to the fundamentals. And that brings us to Hashgraph, or HBAR. Now, I've been covering this. I did a whole separate video. I think it's out already. It's called, Is HBAR a Good Investment for Me, or something to that sort. I would definitely recommend watching it. And if you haven't already done so, make sure you guys are subscribed and give the video a free thumbs up, because crypto is not free, but thumbs up are always free. By the way, I'm drinking juice today, not actual coffee. I had coffee earlier, and it didn't do the trick. So yeah, we're back to juice. What are you guys drinking in today's video? Are you guys driving, listening in the background? Let me know down below in the comments. So Hashgraph sees a Q3 debut for a HEDERA-based institutional private blockchain. So let's understand what in the HBAR is going on here. So Hashgraph, the blockchain development firm focusing on HBAR network, is building a private permission blockchain for enterprises in highly regulated industries, with plans to debut in the third quarter of this year. We're already in the second quarter. What's the third quarter? Getting closer to the end of the year, right? HashSphere, built with Hedera's technology, aims to bridge private and public distributed ledgers, ensuring compliance with regulations while maintaining interoperability, according to the company. Hashgraph is looking to provide services to asset managers, banks, and payment providers seeking secure, low-cost, cross-border transactions with stable coins. While public blockchains offer security and transparency, particular industries like finance and payments often face compliance challenges. HashSphere addresses this by restricting access to verified participants, enabling firms to develop tokenized assets, AI-powered services, and other blockchain-based products while meeting regulatory standards. They said, quote, "From the start, the vision of HEDERA has been to create shared worlds, interconnected networks where enterprises can leverage the power of distributed ledger technology without compromising privacy and control." That's the head of solutions at Hashgraph. The network also integrates HEDERA's existing tools, including the token service for managing digital assets and the consensus service for recording transactions with trusted timestamps. The platform is compatible with the EVM, Ethereum Virtual Machine, allowing developers to deploy decentralized apps using Solidity and other EVM languages. So this kind of goes back to what HEDERA is, what HBAR is, right? Because HEDERA has a big fan base, I could say that. But here's the deal. HEDERA Hashgraph is already basically a private chain, right? It may be publicly decentralized, but it is privately controlled, right? The Hashgraph Council, HBAR Council, it's like 15 different corporations from around the world that are managing the network, and I believe they're the ones who are validating the network as well. And this is good, right? Because what they're talking about here is interoperability with other ecosystems, but in a more controlled environment. And we know these large financial institutions, and even small ones for that matter, and also corporations, they don't want, let me say this way, they want their info and data secured. And so they don't want it, or they don't necessarily trust a public blockchain. And so a private blockchain, this is kind of, it makes things a little bit safer and more comforting for these organizations that are worried about, you know, other competitors stealing their information or their IP or whatever. That's kind of what I get from it. And this does make sense. And a lot of people will say, but Cryptoviser, that's not a public blockchain, da 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 da. Whatever, guys. Is it investable? In my view, the answer is probably yes, right? Especially understanding where the whole ecosystem of HEDERA and HBAR are going. The only caveat I have to investability is the fact that if they're using these chains, do they need to use HBAR, right? It all goes back to, is the crypto valued? Does the crypto actually have value in the ecosystem, right? This whole conversation about, well, of course it has value because the validators need to use it. That will only go so far. You need to have the ability to pay with HEDERA, even if you're using these other chains, right? If it's like a layer 2 or something built on top of HEDERA, like, for these chains to really gain valuation, right? You know, Ethereum is needed to run the Ethereum network, right? You can't just run the Ethereum network without the incentivization of Ethereum. These big corporations, they can run validator nodes without earning rewards. They don't care if they're saving money on this interoperability, interconnected payment system. They don't care if they have to run a node to secure the system. Like, I don't think that's that big of a deal for them. And so if they're running their own node, they don't necessarily need to get paid. And if they don't need to get paid, what do you need the coin for? And so the question goes back to that. Now, I don't know if the answer is that they're going to be using Hashgraph. I don't know that much about HEDERA. We're doing a lot of research here on my end about HBAR, about HEDERA. But it is very interesting. And also notice the timing. What I believe we're going to see is all of these companies, right? We're seeing Circle talking about an IPO. We're seeing Hashgraph talking about a private blockchain for institutions. And there's a lot more that we're talking about as well, specifically in this video, but also outside. Q3, Q4, it seems like this is when a lot of the speculative moves are going to happen in the market. At least that's what many of us are hoping for, because this is quite the market to be in when everybody's so bullish, but the market is looking very bearish. And that brings us to the risk factor. Now, we've talked about this before. What MicroStrategy is doing, no companies are following. Now, you may say, well, this company's buying Bitcoin and this company's buying Bitcoin, but they're buying very little. And as we've covered, the Bitcoin mining companies like Marathon Digital that has taken out $2 billion of debt to buy more Bitcoin, in my view, this is really, really risky, because what they're not accounting for is what happens if we don't go that much higher in the bull market. Right now, they're potentially going to be lower than their dollar cost average in a bear market on debt, right? Now, over the long term, this should be kind of work itself out, but the long term could last a while. And so this is very important to understand the risk factor here, because a lot of people in crypto, a lot of experts, they're not looking at this issue here as a risk. So the Bitcoin historian posted this on X saying, breaking, stablecoin giant Tether just bought $8 billion worth of Bitcoin. Now they hold over 100,000 Bitcoin. Now remember what we were just talking about. Circle's IPOing, which means they have to make money. Tether, we know, already makes money. I mean, they make more profit than most US-based companies make in a year. It's really unbelievable what Tether is able to do. But yeah, they're holding Bitcoin. But then this user, Adam, who says he's recovering center Bitcoin only, right? So he's a, I guess, reformed Bitcoin maximalist, which I tell my viewers as well. The longer you're in the financial crypto space, the more likely you're going to become a Bitcoin maximalist. Because you realize, as we have realized on this channel, right? I mean, last cycle, the tone of this channel was way different than the tone it is now. It was, buy this crypto, this crypto is going to 100x, this crypto is going to 1000x. And granted, some of these cryptos that we talked about did 100x during the previous cycle. But as I theorized in the bear market and theorizing now, I don't necessarily know we're going to see these kind of these grand moves. Every cycle we see less and less percentage gains moving forward. Why? Because there's more cryptos, there's more hustles, there's more companies that are saying, well, we can do this, we can do this, we can do this, we can fix this, we can fix this. And none of them are really doing it, right? This is why when we go back to the fundamentals, the legacy blockchains, the blockchains have been out the longest and have the most usage and the most development and activity and users. These are the ones that succeed and push back into the top 10, because all the other ones that are saying we're going to do X, we're going to do Y, we're going to do Z, can they really do it? I mean, Solana said they were going to do it, and all they came out with was meme coins. Anyway, so this user said, so let me get this straight. Strategy, MicroStrategy, and Tether bought a combined $10 billion of Bitcoin, and the price went down. No, just no. I'm calling paper Bitcoin. Show me the address, prove it. Very interesting. So he's basically saying proof of keys, right? Proof of reserves. Here's the deal. Arkham, this looks like an Arkham page. Arkham has the addresses of Tether's Bitcoin holdings. That's how they know they were buying Bitcoin. They have the actual holdings on the address on the chain. So I don't know what he's saying here. In terms of MicroStrategy, I'm not sure MicroStrategy's like wallet address is on chain, but I'm sure Arkham found it already, right? In my view, there is no, it's not even a question whether they bought this Bitcoin or not. I believe that they have, right? One is a US-based company where they have to show and prove, and Coinbase, feel like we've talked about this before. Coinbase is the custodian. So if Coinbase is paper Bitcoining what MicroStrategy has, then yeah, there's much bigger issues than any of us can even fathom, because that would mean Coinbase, another publicly traded company, is in on this fraud, which I don't think is going on personally. Maybe I'm wrong on that, but I don't think that's happening. We've theorized why the price is not going up when all of this Bitcoin is being bought by MicroStrategy, by Tether, by Marathon Digital, all of these different companies that we know about. And think about the companies and the individuals that are billionaires that we don't know that they're buying, right? My thesis, and I still hold this thesis to be true, is that the Bitcoin ETF issuers, which are BlackRock, Fidelity, they control the market, right? And what we have seen is when they are buying MicroStrategy, Tether, any of these large purchases, we're seeing on the other end that the Bitcoin ETF issuers are selling very large quantities. And in February, when MicroStrategy was buying, the ETFs were selling. And they weren't selling like 15 million or 10 million. They were selling hundreds of millions of dollars. Over the course of like 2 weeks, they sold something like $3 billion of outflow, the outflow out of the Bitcoin ETFs. They are the liquidity for MicroStrategy. They are the liquidity for Tether, right? And so when the Bitcoin ETFs are selling and these guys are buying, they're buying it directly from Wall Street. They're buying it back from Wall Street because Wall Street bought it from the ecosystem of crypto. And the ecosystem of crypto is saying, nope, let us reclaim our money. And then what we're seeing is now we're seeing that the ETFs are dabbling back in, right? Small purchases, $10 million here, $20 million here, $30 million here. But it's nowhere near what was being removed from the ecosystem, removed from the ETFs. That's what I think is going on here. I believe that this is the reason we're seeing all of this Bitcoin, because at the end of the day, the price is based on supply demand. Yes, there are some other factors that can affect the price, but generally speaking, the price of the crypto, price of Bitcoin is based on supply demand. And so if MicroStrategy continues to make these billion-dollar purchases, I have said eventually the coins are going to run out, right? There's not going to be this much liquidity on the market, because now, the floor may have been $100,000 during the previous year, right? In 2024, maybe 100 grand was, a lot of people had sell walls. But now that we already went over 100 grand, a lot of those sell walls are probably moving higher. That's what Because where else is all of this liquidity coming from that is not affecting the market? But the moment that these Bitcoin ETF issuers are inflowing, meaning buying Bitcoin, expanding their portfolio, while MicroStrategy, Tether, all these other companies are buying as well, that's when I think we're going to see the massive moves to the upside. Because again, the liquidity will not be there. The liquidity for buying was coming from the ETFs. But when the ETFs are buying, who's selling? Where's the liquidity coming from? I mean, this can go on for quite a while, right? This is, I think, why they also spread out the ETFs into like 5 or 10 different issuers. So you can't say, oh, you see, BlackRock is trying to control the market. Well, they could say, well, we don't, they could, I mean, BlackRock could outflow $100 million in one day, and one of the other issuers, flows in 25 million, and the other one does 10 million. And through all the other issuers, it's 100 million, so it's a net zero. But BlackRock still sold. Maybe they sold. I mean, they are watching the supply, right? This is the largest financial institutions in the world. They are watching the supply. And I think that when they see the supply dynamics and they don't want the price moving up, they move in the market and provide the liquidity. And I think this is going to continue to go on. This is why we're also probably going to have less and less volatility as time goes on, and we go through more and more cycles. And that brings us to Bitfarms, because again, Bitfarms going down, it's going down, it's going down, but the fundamentals that we've covered on this channel are there. I mean, when I'm recording this video, Bitfarm, I don't know if it's going to show on CoinMarketCap. I don't think it does, but let's see if it does. Bitfarms. It is here. This is wrapped on ETH. I don't think this is going to give me the correct price. Let's see. Yeah, it's not even showing me any real price. So we go to finance.google.com and we're going to type in Bitfarms. Tell me how much you think Bitfarms is. If you said 81 cents, you win. 81 cents. Under a $500 million market cap. You can see, look at the 1-year price chart, just down, down, down. But the fundamentals are right here. This is from the April 1, not April Fool's. Well, I mean, it is April Fool's Day, but this post is not April Fool's. At least I hope not. Anyway, Bitfarms continue to deliver against its operational and strategic objectives in 2025. Operational hash rate increased 20% month over month to 19.5 exahashes under management. So Bitfarms is now in line with the likes of Core Scientific, the likes of, I think Cypher Mining as well. There's like a few different Bitcoin mining companies that are close or at 20 exahashes per second with much higher valuations than Bitfarms. So why is Bitfarms so low from a valuation standpoint? Again, I think that it's just this market is exhausted right now, right? But all it takes, as we've covered, right? We just covered this in the Fidelity research, that these drawdowns were during these periods of time. And so you see most of the drawdowns are for maybe 1 month, maybe a little bit more, 45 days, but very short periods of time relative to the full cycle. And so these are drawdowns, and draw ups or reversals, right? Moves to the upside. These happen only during a certain number of days during the cycle as well. We've covered this before during previous cycles. It's like 11 days out of the entire Bitcoin halving cycle that the market moves up double digits. And so when those moves happen, we have to capture that value, take out profits out of the market, because the market will correct at some point, right? To the downside. I think right now the market is correcting to the downside, or just in a corrective phase to the downside. I mean, we have a 20 exahash Bitcoin mining operation, most of their operations in the United States at this point. They just literally hired James Bond. Go look it up. James Bond, they hired, 007, to basically run their high power compute and AI business and build that out. And people are still bearish on it. It's unbelievable. It's unbelievable to me. They would rather focus and invest in, Peanut the Squirrel coin or PP coin or Solana meme coins than the fundamentals that could potentially make them life-changing returns based on where these assets are. And so what those assets are, you have to make the decision for yourself, right? Is it Bitfarms? Is it Bitcoin? Or is it Cardano? Coinbase is now trying out ADA in their CFTC or Commodity Future Trading Commission regulated futures markets. Coinbase announced that they are going to be adding to the Coinbase derivatives. So they want to self-certify natural gas futures and Cardano futures, expanding their offerings to both energy and crypto derivatives markets. Now, again, a lot of people are going to say, Cryptoviser, this is so exciting. Aren't you excited? Cardanos and futures? It's like, well, first of all, I don't really hold Cardano. But second of all, no, it's not exciting. Because as I've explained before, these derivative markets are meant to manipulate the markets, right? Manipulate the underlying asset. I mean, if you go to their derivatives exchange right here, you just type in ADA. ADA is not yet listed on futures. It seems like it's in process, but the perpetual futures are. And as we've explained on this channel, perpetual futures is effectively what brought down the a lot of cryptos during the last cycle. I don't know why it's not pulling up. Maybe I have to sign in, but these derivative products, they're not typically bullish for the price of the market, because you get the speculators that go in to manipulate the price so that the spot goes down, and then they go buy spot. Spot goes up, they sell, boom, they made profit on the derivative and on the spot price. And they can do this over and over and over, while the holders are like, why is the price going down? It's like, well, if you look at the derivatives, before we didn't have these kind of drawdowns or hold downs, right? Because we are seeing a lot more cryptos holding themselves further down and not making these massive moves. And so with everything that we covered today, I mean, we covered a lot. We covered IPOs, we covered the meme coin season is over, we covered the Federal Reserve injecting money into the markets, institutions creating private blockchains with HEDERA, the potential risk with the Bitcoin buying from these large institutions, some hidden, really good looking stocks and cryptos. I mean, we covered a lot in today's video, and I'd appreciate if you guys give the video a thumbs up. Let me know your feedback down below. What else do you want to see in these videos? What do you agree with, disagree with? Let me know in the comments. I'll see you guys on the next video. Invest responsibly and crypto on.